Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin holds steady at $64,381, while 30-year Treasury yields touch two-decade highs, and the SEC drops its first comprehensive crypto rule. Energy costs surge with the crude-diesel crack spread hitting record levels, threatening inflation just as major institutions expand crypto infrastructure. The SEC unveiled regulation crypto assets on August 18th, proposing the first major framework for digital asset fundraising. The rule creates two tiers. Startups can raise up to $5 million over 4 years or $75 million annually with financial disclosures. Both require detailed disclosures covering source code, tokenomics, and team details. The proposal includes a safe harbor allowing tokens to exit securities classification once issuers cease essential managerial efforts and achieve full decentralization. Attorney Bill Morgan notes the safe harbor could offer Ripple an exit ramp, allowing certification that managerial efforts tied to XRP have permanently ceased, removing investment contract classification entirely. Treasury markets are flashing red. The 30-year US bond yield reached 5.33%, the highest since 2007. Japanese 10-year yields hit 30-year highs while German and French bonds touched multi-decade peaks. Gold rallied 10% this month as investors flee sovereign debt, but Bitcoin has underperformed for 9 months. Energy markets add another layer of concern. The crude diesel crack spread surged to $102.2 per barrel, driven by supply disruptions from Iran and Ukraine conflicts. Oil holding above $90 per barrel threatens inflation expectations. Meanwhile, crypto-collateralized lending declined $22.5 billion from its peak to $56.2 billion. Heavy corporate debt issuance by tech giants has nearly doubled to $220 billion in bonds this year, competing directly with Bitcoin for long-duration capital. Traditional finance continues pushing into crypto infrastructure. Citigroup announced Bitcoin custody services launching later this year through its Custody Plus platform. Robinhood CEO Vlad Tenev urged US regulators to establish frameworks for tokenized stocks, warning America risks ceding financial infrastructure advancement to overseas markets. He highlighted real-time settlement, 24/7 trading, and seamless asset transfers as key advantages. Japan's Metaplanet is expanding to the US market through a $134.6 million deal with Nasdaq-listed Super League Enterprise. Metaplanet will invest 2,100 Bitcoin plus $2.5 million in cash for a 95.7% stake. The Financial Accounting Standards Board proposed classifying certain stablecoins as cash equivalents under GAAP. Stablecoins with liquid reserves equal to or greater than circulating tokens, redeemable for dollars on demand with annual reserve disclosures, would qualify. South Korea's media regulator blocked access to prediction market Polymarket over gambling concerns. Chainalysis filed a bid protest challenging a $94.6 million ICE contract awarded to rival TRM Labs without open bidding. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.